While most people are busy watching stocks, crypto, or the latest social media trend, something extremely unusual is quietly happening in the silver market, and almost nobody is talking about it. COMEX. Silver inventories are draining fast, and this is not a normal move. This is one of those moments that only shows up before major price shocks. If you've ever wondered how real shortages begin, or how price explosions are born before the crowd notices, this is one of those stories you'll want to hear till the very end. In today's video, I'm going to walk you through what's really happening inside the COMEX silver vaults, why this sudden inventory drain matters far more than most people realize, and what history tells us usually happens next when silver disappears this fast. And trust me, by the end of this video, you may never look at silver prices the same way again. Before we go deeper, take a quick second to like this video and subscribe to the Silver Trade channel. It really helps the channel grow and allows me to keep bringing you these behind-the-scenes market stories that most mainstream media completely ignores. If you care about understanding real supply and demand, not just price charts, you're in the right place. Now, let's slow things down and really understand what's going on, because the COMEX silver inventory drain isn't just a number on a screen, it's a signal. And in markets, signals like this usually appear quietly before big moves, not after. The COMEX, for those who don't follow it closely, is one of the most important silver trading hubs in the world. It's where massive futures contracts are settled, and it's where physical silver is supposed to back up paper promises. Inside COMEX vaults, silver is categorized mainly as registered or eligible. Registered silver is the metal that's actually available for delivery against contracts. Eligible silver may exist in the vault, but it's not guaranteed to be used for settlement. Here's where things start to get interesting. Over the past period, registered silver inventories have been dropping at a pace that simply doesn't match normal market behavior. This is not a seasonal fluctuation. This is not random noise. Large amounts of silver are being pulled out, moved, or reclassified. And that raises one big question. Who is taking it, and why now? In most calm markets, silver flows in and out slowly. Industrial users hedge, investors trade, vault levels change gradually. But sudden drains usually mean stress somewhere in the system. Either demand is rising faster than expected, or confidence in paper claims is weakening, or both at the same time. Think about silver's role for a moment. This isn't just a shiny metal people collect. Silver is critical for electronics, solar panels, medical equipment, and advanced technology. At the same time, it's also money, historically speaking. When inflation stays sticky, when debt keeps growing, and when trust in currencies starts to wobble, silver quietly attracts attention from serious players, not retail hype traders. What makes the current COMEX drain so important is timing. We are in a world where central banks have already pushed interest rates hard, governments are drowning in debt, and geopolitical risks are everywhere. In moments like this, physical assets tend to move first, long before headlines catch up. Here's something most people miss. Futures markets work on confidence. As long as traders believe metal will be there if they ask for delivery, the system holds. But when inventories shrink too fast, that confidence can crack. And when confidence cracks, volatility doesn't knock politely, it kicks the door in. History gives us some powerful clues. In past silver bull runs, including periods like the late 1970s or even more recently in 2020, inventory tightness showed up before price acceleration. Back then, withdrawals from vaults were early warnings. Prices didn't jump immediately, but once momentum started, it moved fast and caught most people off guard. Right now, we're seeing something similar in structure, even if prices haven't fully reflected it yet. That disconnect is exactly what long-term investors watch for. When physical reality and paper pricing drift apart, the market eventually has to choose a side. Another detail that deserves attention is who usually takes delivery. Large industrial users don't speculate casually. They secure supply when they sense risk ahead. Institutions don't move metal for fun either. Physical silver is expensive to store and insure. When big players pull it out of COMEX, it's usually because they want control over real metal, not just exposure on paper. This is where many retail investors get misled. They look at the silver price chart and think nothing is happening. But the real story isn't always in price. It's in flow. It's in inventory. It's in behavior behind closed vault doors. And here's the uncomfortable truth. If enough registered silver leaves the system, it creates pressure. Not immediately, not loudly, but steadily. Each contract delivery becomes more sensitive. Each demand spike becomes more dangerous. And eventually, price has to respond. At Silver Trade, this is exactly the kind of moment we pay attention to. Not because it guarantees anything tomorrow, but because it tells us something about direction. Markets whisper before they scream. Let's also talk psychology for a second. Most investors are trained to react, not anticipate. They buy after price goes up. They panic after price crashes. But inventory drains are early signals. They reward patience and understanding, not emotional clicks. If you're still watching at this point, you already think differently than most, and that's a good thing, because the biggest moves usually reward those who pay attention before the crowd arrives. Now, does this mean silver will explode overnight? No. Markets rarely move that cleanly. There will be pullbacks, fake moves, and doubt. But tightening physical supply creates a floor. It changes the risk equation. It makes downside smaller and upside more violent when momentum finally hits. Another factor that adds fuel to this story is the broader commodities environment. Energy prices remain unstable. Supply chains are still fragile. Green energy demand keeps growing, and silver sits right at the center of that trend. All of this increases pressure on physical supply, even without investor demand. So when you combine industrial demand, monetary uncertainty, and shrinking COMEX inventories, you don't get a guarantee. You get a warning. And in financial markets, warnings are priceless if you're willing to listen. This is why watching inventory data matters more than listening to hype. It's boring, it's quiet, and that's exactly why it works. As we move closer to the end of this video, I want you to think about one simple question. If silver inventories keep draining and demand doesn't slow down, where does the metal come from? At what price does someone finally say no? That question doesn't need an immediate answer. Markets will answer it in their own time. But by the time headlines start screaming about silver shortages, the opportunity is usually already gone. If this video helped you see the silver market a little differently, make sure to share it with someone who still thinks silver is boring or irrelevant. Drop a comment below and tell me what you think is driving this COMEX inventory drain. Is it industrial demand, institutional fear, or something bigger brewing under the surface? Your comments help this channel grow, and I read every single one. And if you want more deep dive silver market stories like this, stay subscribed to Silver Trade, because this story is far from over. Thanks for watching, and I'll see you in the next video.